Hello and welcome to the March 1st, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Sandridge Energy, ticker symbol SD. This is a $1.5 billion basic materials company. Sandridge operates in the natural gas and oil sector right here in the United States. Taking a look at the chart here, you can see that Sandridge actually was trading up around $11 a little more than a month ago. It's been going straight down, and during this process it actually has made its way all the way back to an area where it has found some pretty good support in the past. So we always like to try and set up the risk reward just right in order for to take a long position, because at least in this case, if it doesn't work out, you don't have a whole lot of downside because you are sitting on support. But we like the hammer that went in on Friday. You can see this candlestick here where we opened at 792, traded all the way down to 766 intraday, and then came all the way back, closed at the high of the day at 794. And also check out the volume. So it looked like an intraday breakdown on very heavy volume, and instead we reversed back up, put in a reversing candle, and we have a long-term positive divergence in play. We have lower prices, so we actually forged lower prices here than what we saw a couple of weeks ago, and with that you can see the MACD is actually quite a bit higher, so we have a nice positive divergence in play. So we've got a situation where stock sold off pretty hard on Friday, but we did reverse back up, finish above closing price support. So we held price support. We also put in a reversing candle off of this downtrend, and we're showing a long-term positive divergence, all of which are pretty strong evidence that in the near term Sandridge Energy could be primed for at least a move back up to the 20-day, and with a negative divergence in, or excuse me, a positive divergence in play, normally what we look for is a trip back to the 50-day, which is sitting up at 923. So you've got about $1.30 or so up to resistance, and from the current level that would be better than a 15% move to the downside. A close much below, say, 775, especially if volume is heavy again, would probably spook me. I'd probably move back to the sideline. So risk reward here on this one looks pretty good at this level. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.